A very good evening and a warm welcome to Personal Finance. I'm Kukuletu Cele. Now, debt can be the first option for some when an unexpected expense hits. But according to Tommy Nel, head of credit at FNB Home Loans, your home loan could be an effective savings tool. He joins me now for more insights on this. Good to have you with us this evening, Tommy. Maybe if you give us more insights firstly as to your home loan as a savings tool, because so often consumers don't see it that way.
Good evening, Gugu. Indeed, so many people think a home loan is simply that million rand that the bank borrows you when you want to acquire a property, but it can be so much more. Especially in the South African context, we see many overseas banks whereby if a customer would want to pay off his loan and save in additional, they would actually have to have the home loan on the one side and then save in another account on the other side. Now, often a consumer would lose a lot of interest that way. So in the South African context, with prime currently at 9.25%, it might mean borrowing at 9.25 and then investing at, say, 3 or 4%. And you can think of how disadvantageous that would be to customers. However, in the South African context, you actually have the ability to save in your home loan at your home loan rate of interest. So if you
How
were
do
to
you
pay,
do that? Because that's an interesting analogy.
Yes.
And at nice interest rates at the moment.
Yeah, so absolutely. If you, for example, pay 10% on your home loan, each additional rand that you put into your home loan, you effectively earn that 10% of interest. And the further upside is there's no risk to that. So it's a risk-free, tax-free investment that is available to you at any point. So there's no investment that you can make that can give you a risk-free, tax-free, on-demand facility at a 10% interest rate.
Explain this. Is this now a savings account which is attached to the home loan or inside the home loan, or is this just additional payments that you make into your home loan which could actually reduce the term of that particular loan facility?
So it's absolutely the latter. So it's basically one account, but the additional funds that you pay into the loan actually help towards reducing the balance, and you are ever only charged interest on the outstanding balance at any point. And that's where the benefit then accrues to you, actually at the rate of interest that you would have paid on your home loan. But with the upside is that you have access to the funds. So that's a really important benefit that one shouldn't underestimate. Many people, when things start to go a bit rocky with their finances, could be tempted to go and try and take out a personal loan. But I always say that to take out a loan at potentially 25 up to even 30% interest rates, if you're not really disciplined and prepared to cut your expenses significantly or find a way to boost your income, that could actually just set you up for some problems further down the line.
Exactly.
So, we really believe that a home loan can be a really empowering tool whereby if a customer is prepared to, on a disciplined basis, make additional monthly contributions into their home loan, you could build up quite a nice nest egg, obviously not to just use for any, any purpose, but if life really throws you one of those curveballs, as it tends to do, you don't have to go and take a personal loan at very high rates of interest. If actually, you're able to actually take the money out on internet banking right there and then. So it's quite an empowering tool, we believe.
I want us to look at that contribution that you alluded to, the so-called savings or additional extra that you're paying into your home loan. Is there a specific figure that you can use, 10%, 15% extra? How much is actually enough and how much makes a significant difference?
Yeah, so that will really depend on, from person to person. But having said that, the important part is really to save, whether you're able to maybe start off slowly and increase your repayments by 5%. We have the luxury of inflation, whereby our salary typically increases with something that looks like inflation on an annual basis. So you might be a bit tight in your first year of having the home loan, but in year 2 and year 3, if you benefit from a salary increase, maybe that's the point where you can actually start contributing even more into your home loan. And it could be as simple as setting up a scheduled payment into your home loan that you can dynamically adjust on internet banking. So, when things get a bit tough, you can stop it for a few months. You can simply log on, maybe increase it from year 2 onwards. So it's a really nice hassle-free experience that customers can actually do these things themselves. They don't have to go and stand in a queue to be able to utilize this facility.
Tommy, I know of a few people, especially in the older generation, who are a little bit wary about paying off their properties or additional contributions to their home loan because of the fees and penalties that might be involved. Are they such, and if so, are they significant enough to outweigh the benefits of actually paying extra into your home loan?
Yeah, so Gugu, I mean, that's further really good news that I can give you, is that there's absolutely no penalty involved in this whatsoever. you can actually, if you have a home loan at this point, you can go to the bank right now and settle that full outstanding balance without a single cent of penalty.
That sounds too good to be true.
It probably does, but in this case, I think some of the South African banks are renowned worldwide for their innovation. And we really have some quality banks, and this is a quality product that all the banks offer. The only point where there could be some fees involved is when you want to actually want to cancel your bond. So you can pay it down to a zero balance, but to then cancel it, you'd have to give the bank notice to effect the cancellation. But there would not be a penalty. The penalty typically works on a 90-day penalty interest, but if your balance is zero, there is no penalty effectively. So I think really good news out there. There's really no terms and conditions, no clauses. It's just a really nice tool that customers can use to their benefit.
So I've contributed extra into my home loan. Something's happened and I need additional funding. I'm not going to go for the personal loan. How do I access that money, the additional payments that I made into my home loan?
There's so many options. So some customers prefer to go into a branch. Some customers prefer to do it by telephone banking. You can simply use your banking app, log on to online banking. It's literally a 10, 15, 20-second exercise that you do right there, and then transfer the money into your current account and off you go. So it's a really simple, hassle-free experience, 24/7. So really empowering. You don't have to go and stand in a bank queue. It's really convenient from that perspective as well, I would say.
No fees, no penalties, no queues?
Absolutely.
I think you're pulling my leg, but maybe you're not. And let's deal with a typical example here. Yeah. Maybe if we use a home loan of about R1 million facility, yes. What kind of difference in the payments would actually increase in that, that extra pot of money, generating and increasing quite substantially at current interest rates? Okay, so let's look at a few numbers. At R1 million, if you assume 240 months, so you're going to pay the loan off over 20 years, at roughly the rate of prime, at currently 9.25%. Your repayment would be around 9,100 Rand. Okay, if you increase that by 10%, so that's an additional payment of around 900 Rand. So you're going to pay 10,000 Rand. The interest saving is 25%. So instead of paying 1.2 million Rand in interest over the 20-year period, you would actually only pay around 900,000. So big time, 25% interest saving. You will be paying your loan off 4 years earlier, so instead of the 20 years, within 4 years your loan would be paid off. But here's the thing that people don't often realize is that within 5 years you would have accumulated a prepaid amount of 70,000 Rand. So which you can access at any time at the home loan rate of interest. So at that point, things like a car needing new tires, that car may be going in for a big service that costs you big money. That geyser that burst. That geyser that bursts. Literally as simple as signing onto online banking and transferring the money. What about, I've used up that 70,000 Rand extra now, or I've actually deducted from that savings pot. When you pay back that money, are you paying it back at the same interest rates, or does it adjust according to whatever happens to the repo rate adjustments? No, so your full home loan is afforded to you at the rate of interest that you pay. So it's a flat interest rate. There are some structured products in the market whereby your interest rate might ratchet up a little bit as you draw down on the loan, as the loan to value increases, but that's more prevalent in the private banking kind of space. So on a normal traditional home loan, your rate of interest applies throughout the loan, irrespective of what the balance is. Let's touch on the rate of interest, because obviously that varies from person to person. It takes your credit record into account. But is it always best to fix it or go with the flow and adjust it as accordingly? Yeah, that's also one of those very personal questions. I think many people make the mistake of trying to time the interest rate cycle. So they would wait for potentially some bad news to hit the media, where the governor of the Reserve Bank says they're going to put rates up, and they then run to the bank and they're looking to fix their rate of interest. The unfortunate part behind that approach is that the market funding curves adjusts on a daily basis by the second. So it's dynamic pricing of rate expectations. So if you wait for that bad inflation number to come out, or for the governor to send these kind of warning signals, you would already be charged a much higher rate of interest to fix your loan. So our advice is rather for customers to think of a fixed rate more like an insurance type product. So it's not formally an insurance product, but if you know that you can afford 1% more than your current interest rate, then you can have the guarantee of paying that interest rate for 5 years. But if rates were to go up by 2% or 3%, you stand the risk of losing your property.
then maybe paying 1% more is not such a bad idea. But we find that customers typically try to, on the short term, look for a better rate of interest. And you can never get an insurance product that protects you in that way that I've described and has a lower rate of interest. So I think it's a very personal thing that a consumer needs to evaluate based on their own circumstances. And they shouldn't look to time the interest rate cycle. If you know that the wheels will fall off if rates go up by 2 or 3%, and you have the option of fixing your rate at 1% above your current rate, I would say that's absolutely a thing that you should take on.
The trick is to get the advice then quite clearly.
Absolutely.
To go back to taking that money out of your savings pot and having to pay it back again into your bond, will that at any point impact one's credit history?
Not at all. So these prepaid funds are something that is at your disposal at any time, has no impact on your credit rating whatsoever. So there's
which versus a personal loan, you go out and that also impacts on your credit record.
Absolutely. Credit providers, unfortunately, people that take up short-term loans and unsecured loans and regular unsecured loans, it tends to point towards some level of one not being able to manage your finances perhaps as prudently as you should be. So it's if you do take up the loans and you pay them on time every time, it wouldn't necessarily have an adverse impact, but if the more you take, it starts to indicate that you're unable to really, on a sustainable basis, save and look after your household budget.
Tommy, we've said quite a bit, and maybe it's time now for the viewers to get all of this information in perspective. Tommy, maybe the 5 key takeaway points that viewers need to leave this conversation knowing this evening. What are they if you explain them in depth?
Yeah, so Google, I would say one of the age-old cliches is it's never too late to start. So whether you 5 years into your loan at any point, take up this facility. It's a really good facility. Log on to online banking, schedule that additional payment into your home loan. You can never start too early. Build up the money. Try not to use it. So it will be tempting. It will be showing there as an available balance on your internet banking. But one needs to practice some restraint with these things. Leave the money. That you will have the need for it, that rainy day kind of a fund. The thing will come that you might need that money for, and then you're well equipped to then, instead of going to borrow the money, which could put some pressure on your cash flow, use the money from your home loan. So it's all about financial discipline. It's all about, irrespective of the amount, whether it's 100 Rand, 200 Rand, 500 Rand.
It makes a difference.
Absolutely. And as you get that salary increase, if you're lucky to, increase your home loans repayment and give yourself that financial flexibility to be able to weather the storm when it does come.
Financial discipline. Thank you so much for your time. It's been fantastic speaking to you. And that's where we have to leave it for Personal Finance this evening. A big thank you once more to Tommy Nel. He's the head of credit at FNB Home Loans. Now, do remember that we want to hear from you, so send us your thoughts and your insights and tweet your comments to @CNBC Africa using the hashtag Finance410 or to myself @Kukumfupi on Twitter. Until next time, it's goodbye for now.